now with great pleasure, let me now bring on board Mr. Dinesh Kumar Khara, Managing Director of State Bank of India. Mr. Khara, good morning and thank you for joining us. Now, Mr. Khara, the SBI numbers came on Friday during the market hours, so markets have got a glimpse of the headline numbers, so I won't go there. But I'll take the numbers slightly forward. Now, what markets are betting on is that your cost will come down dramatically, and that could be the turning point for State Bank of India for this year and for next year. Are markets assessing right that your cost will come down dramatically going forward?
Yeah, I think, good morning to you first of all. Thank you very much for giving me an opportunity to be a part of your show. Well, of course, as far as the cost of deposits are concerned, it has come down from about 5.30% last year to about 5.10%. And going forward also, we expect that we'll be in a position to control this cost of deposit. Apart from that, very significant portion is the credit cost, which has come down from 3.62% to 2.66%. And we hope that this will be in a position to reduce this credit cost significantly in the coming year also. So that's the reason. And also, apart from that, we feel that there will be good opportunities for us to grow in the right kind of a segment where we would like to grow. And that will also improve our earning, and that will subsequently improve the profitability of the bank also.
Give us a range for your entire credit cost, because it is high at 3.5%, and many believe that your credit cost will come down dramatically, and that would be the turning point for SBI.
Actually, it was 3.62% last year credit cost. It has already come down to 2.66%. And actually, if we look at our slippages ratios, which are much lower as compared to, we had a slippage ratio of 1.60% for the financial year. That also has come down from 4.85%. And if we look at our slippage ratio for the second half of financial year 19, it was only 1.16%. So that actually augurs very well in terms of ensuring that I think we hope that we should be in a position to reduce this credit cost significantly going forward. And that's a very, very conscious effort on the part of the bank also to ensure that we should reduce it as much as possible.
Just wanted a sense, Mr. Khara, on your commentary, which is suggesting that worst of the high provisioning, worst of the high credit cost and NPA stress is all over. What gives you this kind of confidence that all the pain points are behind you?
See, if you really look at it, our provision coverage ratio, which has moved up to about 78-79%. So that is something, and also apart from that, that is for the past, whatever has happened in the past. Going forward, we have strengthened our underwriting processes significantly. And also we are, these are the two major factors which gives us the confidence that going forward, we should be in a much better position and we should not have any issues as we had in the past.
Okay. Looking at the internals, the CASA growth has been weaker in the quarter gone by, and analysts are saying that we closely need to watch out for your savings rate as well. Can you give us an outlook on your overall CASA, and what is the outlook when it comes to your recoveries as well?
As far as CASA is concerned, we have got a decent CASA. That's not an issue at all. And we are very conscious in terms of we should be activating our deposit mobilization as and when we find the right kind of opportunities in the market. As of now, we feel that the kind of deposit growth which we have, at this we can easily support our 12% kind of a loan growth which we are envisaging going forward. So I think we don't have any concerns as far as our deposit franchise is concerned. We are very confident that we'll be in a position to raise the deposits as and when we have the right kind of opportunities available.
SBI has gone on record and said that they would be raising capital soon. But the word soon was used 2 quarters ago, at least 5 months ago. What is stopping you from raising capital?
So we don't need the capital as of now, because at this kind of a capital, we can easily support our 12% kind of a loan growth, which we are envisaging for the ensuing year. So I think we should raise capital as and when we really need it. We have got a very comfortable capital adequacy position, and that is the reason why we have not gone ahead and raised the capital. Because we have to be very mindful that capital is at a cost, and we should really incur that cost when we need it.
So on return on asset or ROA, Where do you think that will settle for this year? Because if I compare SBI's number with other banks, of course there are legacy challenge for SBI, there is scope of a marked improvement there.
No, we are, of course, we are very cognizant of this particular requirement, and we are aiming to take it to 0.75 in the ensuing year.
Now you've gone on record and said that you would be looking at taking 2 of your subsidiaries public in this financial year. Would you go ahead with this irrespective of the market condition, or there is a commitment with your investors that you need to take them public?
There is no such commitment as such, but we feel that these subsidiaries have matured and they are at the right position when we should tap the market. And also, I think, of course, always all these decisions are subject to the market conditions, and we would not like to be shortchanged when it comes to unlocking value from the subsidiaries. But yes, of course, if the market conditions remains favorable, then we will certainly be offloading these two. We'll be going to market and raising capital for these subsidiaries, and of course, offloading part of our equity in these subsidiaries also.
What is the outlook when it comes to your loan growth as well? In the current environment, do you have the potential to scale it up further, and can you give us, some sort of a range at what you're looking at?
Yeah, I think we feel that we should not have any issues when it comes to the loan growth. Last year, we have seen that we have grown at about 18% in the retail segment, at almost about 14% in our corporate segment, and overall, including our foreign operations, the loan growth is around 11%. And when we are looking at the loan growth, we have to be very mindful that there was about 8 billion kind of a book which we had in the overseas operation, which on account of the bias credit, which we have bridged all that gap, and now we have recorded the kind of growth which we have seen. So considering that and the kind of economic activity which is there in the economy, we feel that we should not have any challenge when it comes to the corporate loan growth. We should be in a position to achieve the corporate loan growth about 12%, and retail, I expect that it would be almost in the same range. This is what our expectation is.
What can you tell us, Mr. Khara, about what kind of recoveries you hope to clock from here?
Well, of course, a couple of major accounts in NCLT. We hope that in the current year we should be in a position to recover. And apart from that, a consistent effort is there for seeing that if at all there could be some OTS which could be possible. So all those efforts are, these efforts are very actively pursued by the bank.
SME stress to come in the second half, given that there is a slowdown in the economy, the slowdown in consumer, the slowdown in rural demand. Can that be the big dampener for, not for SBI, but for everyone in the second half?
Let's wait and watch. I think it's we need not be so pessimistic right away. So let's wait and watch.
Started the calendar year, you were optimistic. Can I say that SBI now is confident of whatever they are guiding?
Yeah, I think what we are saying, we are quite confident of.
So can I safely say that SBI is now set for normalized profits for next 2 years?
Yeah, I can. We are quite confident of that.
Okay. Appreciate your time, Mr. Khara, and thank you for joining us.